normal written disclosures that we are required to show. Everything we talk about, educational and informational in nature only. Nothing is a recommendation. Any expressions of opinion that either of us make could change at any time based on market conditions. We look at a lot of charts, but Schwab does not recommend the use of technical analysis as your sole method of investment research. We look at ETFs and ETNs. You're going to trade those, read a prospectus. We also look at futures contracts. You're going to trade those. Read the risk disclosure statement for futures and options. And with that, I'll put up the heat map here and just review the news flow this morning. Mike, if I miss anything, just chime in.
Will do.
Alrighty, so let's just we've been having this recurrence of the virus in some places. The market was keen on that certainly yesterday. Today, it doesn't seem it cares quite as much, but let's just review what's been going on. So there were new records set as outbreaks in the Sunbelt have grown at a pretty brisk pace. Now, to be fair, no single state has reached the hospital stressor scale that we saw in the April numbers from New York. But in Arizona, Texas, Florida, and the Carolinas, the trend is definitely higher. So even more distressing is, although testing has been slowed a little bit, the positive test rate, in other words, you get tested, how many people that get tested actually have it, has gone up to 7.7, and in Arizona, it's 22%. Now, whether that is a data outlier or it's actually true, I think people are looking into that right now. But there are double-digit positive rates in Texas, Florida, South Carolina, Nevada, Georgia, Mississippi, and Utah. Mask orders are being rolled out today in a variety of these states, North Carolina and Utah. Actually, they had mandatory mask orders yesterday. As for hospitals, the trend is increasing. Slowly, but it's beginning to accelerate just a little bit. New York, New Jersey, and Connecticut will require visitors from virus hotspots to self-quarantine for 14 days. That's not going to help travel to the Big Apple, I think, if you got to sit for 14 days in a hotel room or something.
Absolutely not.
Yeah, Nevada's governor is now ordering face masks to be worn in public places and also in all the casinos. Walt Disney has announced that it's delaying Disneyland in California, the reopening now past the previous July 17th date. And you guys and I were just talking prior to the show there in Texas, because our production crew's in Texas. Greg Abbott, the governor, said the state will pause any further reopenings. He said businesses that are permitted to open under the previous phases can continue to operate at the designated occupancy levels outlined by the Texas Department of State. In other news, we had initial claims. They were actually higher than the consensus, although they decreased 60,000 from last week, but it's still high, 1.48 million. The consensus was for 1.25. So it's nice to see a drop from last week, but there's still 19.5 million people on uninsurance continuing claims. So the question here is, will these stalled reopening things that we're seeing, is that going to make like next week's worse? Are we going to start seeing that again? The third estimate for Q1 GDP was unchanged at -5%. The market doesn't care, it's old data. We also saw US exports sink to the lowest level in a decade, while imports also dropped. Then some good news for the financials, though. US banking regulators saying they're going to ease restrictions as far as the Volcker rule goes. So they'll allow banks to make more large investments into venture capital. Remember, the Volcker rule was there to keep banks from becoming basically hedge funds, right? Taking all that FDIC money and investing it in, like they're a hedge fund. But now they can make investments into venture capital along with some of their clients. Also, the other part of the announcement today was that before, if you had derivatives trades between different affiliates of the same firm, each side had to have the amount of money to cover that. Now, uh, if it's between different affiliates of the same firm, you don't have to do that. So that should free up, they said, around $40 billion for the industry.
Yeah, the banks need some good news.
Yeah, no
So,
kidding. Speaking of the banks too, just keep in mind that after the close today at 4:30, we are getting the stress tests. And one of the stressors that they are looking at, of course, is what if the coronavirus gets a lot worse, what will the banks be like? So stay tuned for that. So that's all I got on the news here. I'm going to turn it over to you. We'll go over to Street Smart Central, and what do you want to look at?
well, since we had a little bit of good news for the banks, let's have some bad news for the bulls here. Let's look at some markets that are making some pretty sharp downward moves. Let's look at natural gas. Let's look at NGQ20 to start.
Oh,
Oh, yeah, that's an ugly looking chart if you're long the natural gas market here, as the market has made pretty historic lows. In fact, Lee, we're at the lowest level for the front month futures, which is actually the July, but they go off tomorrow. Uh, since 1995. So, Lee, what were you doing the summer of 1995 when you see natural gas at these levels
I
previously?
I was not having natural gas in my portfolio. Of course, I would have avoided it. Any reason for this, Mike? What's going on here?
Oh, well, the reasons are, well, one thing, we had the EIA data today for natural gas inventories, and it was up larger than expected, up 120 million, I'm sorry, 120 billion cubic feet when that was at the very high end of the pre-report estimates. And
Uh,
even going for, longer term, 5-year average, we're 18% above the 5-year average, 30, almost 33% above the last year's total, as storage levels here are more than ample despite rig counts being, I mean, at their lowest level in several years. We're down to 75 active gas rig counts. And just to put that in perspective, last year, this time we had 181 working. So
wow.
even though the even though production, has been curtailed sharply, we still have more than enough. The LNG exports have been kind of anemic, as usually we would ship those out to Europe and Asia, but they're still trying to get their economies recovering from the coronavirus outbreak, and there's just slack demand in a time when we have plenty of storage, and even the weather isn't really cooperating either, as we're seeing the 1/3 of the U.S. is expected to be below normal temperatures in the 6 to 10 day forecast. So it's kind of a perfect storm here for natural gas at these levels. So where can it go now? I mean, as you can see, we had this huge drawdown today, 25-year lows. If we go back to that summer of 1995, it got down to $1.39
No.
was the low there. And if you go back even further, we go that back to 125. So those are your two downside targets that I think a lot of traders are going to watch. Besides the 150 zone, that's kind of a round number there. So that's probably your short-term support, but 139 is longer-term support for the market, and definitely something to keep an eye on. If this market is getting a little bit oversold, maybe you could see a bounce back up to, I don't know, like maybe up to that 175 zone if you get a little bit of a correction here. But right now, I think the Bears are still in control. So I wouldn't be surprised if that 139 be the next test here for the August gas, especially if the weather, we don't get a really big hot spell over the next several weeks, because that would actually generate a little bit of demand for electricity for cooling demand. But if we don't get that, then yeah, I think we may see a 130s handle here for natural gas. Another market, yeah, another market here that's also kind of on some dire straits here is the corn market. Let's look at CZ20. Not good for us corn farmers here in Illinois there. This market here is once again making yearly lows, breaching the 325 level here. And it's kind of a similar situation with natural gas. We just have a very burdensome supply of corn here in the U.S. Even though we've seen a little bit of pickup in the export business here, it still looks like that U.S. Producers are going to plant between probably 90, have planned between 95 and 97 million acres of corn at a time when, we're seeing, exports there kind of be arraigned. There's a big report coming out on June 30th. It's the quarterly grain stocks and plantings report, and traders will be definitely keeping an eye to see if the USDA has revised lower their expectations for this year's corn acreage. It was almost 97 million acres. Trade estimates are probably closer to 95, so we'll have to see what the USDA comes out with that. But I think longer term, what's the concern is if we have a decent production this year, whether we have 94, 95, 97 million acres here as well, U.S. ending stocks could be well over 3.6 billion bushels. And we have not seen ending stocks that low since, I think I was reading 1987. So Lee, what were you doing in 1987?
Yeah, well, I was a broker for EF Hutton watching the crash.
That's right. Yeah. So hopefully we won't see a crash in corn prices there either. But and if, just to put that in perspective, corn prices got down to the 160s in the summer of '87.
Wow.
So I'm not saying we're going to happen this year here though. If we do get the 3.6 billion bushels, a two handle for corn would not be out of the question below $3, which, like I said, we have not seen since the 1990s.
I,
So,
I,
yes,
I got a question for you.
sure. You there, Lee? Guess it was quite the question there. All
So,
right, yeah. Yeah, there you go.
what percentage of, or I mean, or just in a general way, uh, yeah, oh, okay,
Yeah.
I think I'm back on with the audio. I was just wondering if, people aren't driving as much, is that, the ethanol additives that they make out of corn, is that also a
That
headwind
it was
on this
definitely
thing?
been a headwind. We're starting as the oil prices started to go up and we started to see a little bit of increase in gasoline demand. We're seeing more of those ethanol plants coming back online, but that was definitely an issue there a few months ago, and that was just, that was just demand there that's probably not going to be replaced anytime soon. So yes, ethanol definitely was weighing on that corn demand as well. So yeah, technically probably 320 is your next support level there for the December corn, all the way down to $3. Though I think it's probably not going to be quite the straight shot down like we've seen from 345 to 325 the last few days. It may be more in fits and starts, but 320 to 315, especially if we get a bearish report on Tuesday, would not be out of the cards. On the upside, some resistance comes in probably around that 340 zone, around the 20-day moving average, all the way up to around 348, which was the recent high of this move. But yeah, once again, yeah, not looking that great if you're a corn producer here in the U.S. Let's start with something that's a little bit more positive though overall. Let's say the gold market. Let's look at GCQ20. Well, gold finally kind of broke out of that little bit of the channel there, but of course, as we've seen in the past several months here, it once again went right back down into the channel. So it seems like there's definitely every time the gold market tries to hit that $1,800 level, it seems to generate some selling interest into the market. So that's happened once again. So what I would want to see here, though, and this little correction back into the consolidation zone, I would not want to see it really get back below that 1725 level. I want to see it kind of maybe stay above the upper 50% of this channel here as well too, and maybe make it one more run to try to break out to that 1800 level if you're bullish. So that'd be the area I'd be looking. 1800 is your pretty significant resistance on the gold market. Support, like I said, around that 1725 zone. So still, I think I'm still cautiously bullish on gold as long as really as long as you don't take out the lower end of that channel there. You got to say the gold market is still in an upper trend. However, it's going to be very choppy action. It seems it's not going to be too easy on the gold bulls. And finally, let's end it up with the crude oil, DLQ20. We got close at filling in that chart gap, Lee, a couple days ago. Just missed it by
Yeah.
a few cents. So still, that's my upside target here for the oil market. You had a little bit of a pullback the last 2 days, even though the EAA data was okay. I mean, a little bit of an increase there in supplies, and once again, the trend of lower stocks in Cushing, Oklahoma, and an increase in the Strategic Petroleum Reserve continued on once again. Uh, if there's any positive thing is gasoline inventories are once again lower as despite a little bit of an uptick in the refinery rate. So that's a little bit supported for the market. But I think even today's reaction as well too. We tested the 20-day moving average. We've kind of rallied above that. So I still think the next move there is going to be trying to close up the gap and maybe even a run to $45. But for that, we need to see a little bit better uh, news coming out about the coronavirus, once again, the outbreak and on some of those states where we're seeing the increased cases as well too. I think that would be the catalyst that can maybe finally get the market up to $45. On the downside though, if this we continue this little bit of a correction here though, probably looking down to buy that 34.50 zone as your next support level. So Lee, let's turn it back to you.
Yeah, well, we got lots of questions for you before I
No,
get it back here. Somebody wants to see the chart and your comments on gasoline.
sure. Let's pull up the August gasoline here. RBQ.
RBQ 20.
I mean, it's overall, I think it's a little bit stronger than the crude oil market as just the amount of the upswing. Once again, it's also got that chart gap. It's got to fill in well. So it actually looks pretty similar to the crude oil market. Today, I mean, we had really a sharp test of that 20-day moving average, and once again, that's also rebounded as well too. So I would say we're probably looking at that 135, filling in that chart gap is your next resistance level, all the way up to the 200-day moving average just above 140. Support, though, we're probably looking at around the 108 to 109 level for gasoline. So, but yeah, this chart looks, I mean, it looks okay. So we'll see if this little bit of a correction is only a short-term nature. We once again try to test that chart gap there and see if we can finally fill it once and for all.
All right, and we had a question on your discussion on corn. Is the trade war affecting that at all, or not affecting it, or changing, or whatever?
It is in a sense, even though China normally would not be a big U.S. corn buyer, they'd be more in soybeans. But I mean, they may actually look to buy some U.S. corn, especially at these levels here as well, because I mean, we're getting to be fairly cheap on the global market. So yeah, I think if there's anything on the trade deal, if they could actually come to some kind of detente here, you may actually see China maybe actually look to some U.S. corn because they still have a lot more to go to fulfill that phase one deal. And corn at these levels may actually be attractive for them to kind of restock their strategic reserves.
All right, and then finally, somebody wants to see silver.
Sure, let's look at SIU 20. Rolling over to September now. Just really just a kind of a choppy consolidated trade. Almost looks like a little bit of maybe a descending triangle actually forming here, and we're kind of like almost right there in the middle of it, around that $18 level. So I think silver is going to go kind of how the gold market goes. If gold could actually break out above that 1800 level, it's going to probably pull silver with it. Whether it's going to outperform, I mean, it hasn't so far. So that's probably my guess. So yeah, I would say with that trend line that Lee drew is pretty good. If you see a breakout above that, then maybe a test up to those highs at 1900 are possible. On the downside though, you got that 200-day moving average lurking there around that. What is that? 1720 as your support level for silver.
All righty, let's go look at our bond signal and interest rates. So let's take it the 10-year. False breakout, just kind of back in the range. So not a lot going on there. Yields are down a little bit today. Our trend following TLT situation is we did have a trend following sell here on the TLT, but as I've been saying, I want to break out of this little range for confirmation one way or the other because the moving averages are so close and so flat.
Right. Yeah.
You might
get a lot
get
of whipsaws otherwise. Yeah.
Yeah, so you break out here, then uh, the faster moving average across above the slower one, you're getting price confirmation. That would be a buy. Similarly, if it broke down below about 159, this moving average moved down, confirming the sell signal that was back here at the beginning of June. So right now it's a coin toss. It looks like to me. Okay, let us go and take a look at the market. Well, above the 50-day moving average, up everything, just start putting things back on. So let's take a look. There's the 50-day. We have horizontal support right in there. Also at the 50-day. The question would be, of course, are we have not been able to fill the gap yet, right? So you've got pretty good resistance right there. What was that, 3160?
Correct.
Yeah, so that's a little bit of overhead resistance. One, two, three, four tests couldn't get through there. But you got good support down here too. It looks like maybe we're starting to form a little bit of a triangle here.
It does, and we're right at the 200-day moving average too.
Yeah, I'm gonna put that
That's
on
a couple
now.
days of a test of that.
Yeah. So, my feeling has been shorter term choppiness, longer term. Okay. We have a question from Florida. Is the descending triangle usually bearish? If you look at a technical analysis textbook, they often say that, but somebody named Tom Bolkolsky, um, who wrote a 1,000-page treatise on chart patterns, and he followed them for like 10 years on New York Stock Exchange stocks. He actually found, believe it or not, that one of the strongest bullish signals that seems to work is a breakout of on the upside of a descending triangle. So his results suggest that the classic definition that is bearish is not maybe true. So, for what it's worth. But if you like chart patterns, he wrote the Encyclopedia of Chart Patterns, so you can take a look at that. What I wanted to do is talk a little bit about, as we usually do, give you some back testing stuff to just contemplate. And we're going to start because it is Thursday, which means what, Mike?
It's Sentiment Thursday, Lee.
That's right. So let us talk about that just a little bit. So let's start with the newsletter writers, Investors Intelligence. Now that's based on trading through Friday night usually, and they've been getting more optimistic. One of the reasons probably is that there's all this press about Robinhood users making more money than the hedge funds, and they don't want to get left behind. So if you are in one of these bull markets that we have been from the bottom, you don't want to get too negative because you're going to lose subscriptions, right? So, so they got a little bit more bullish. It shows now 3 times as many bulls as bears, which means the bull bear ratio is greater than 75%. And this is the first time this has happened in 5 months. So you would say probably that, well, that is a contrarian sell signal, right? They're getting bullish. But looking at the data, since we have been below 75% on that ratio for as many months as I said, and now we are above it for the first time. Going back to 1969, it does not have, at least in the short term, quite the bearish import because it's momentum a little bit. So, a month later, the market was up 86% of the time. However, as I said, that's from 1969. If you take a look just in the current bull market, though, it suggests that it's kind of a week later. So we're into that. The market's been down a little bit, which is kind of what we've seen since Friday, or kind of unchanged. The issue is it does give a bearish signal, though, is the way you might expect as a contrarian. 2 months out, the market was only up 40% of the time. So probably, I think that returning optimism is, in the short term, maybe a good time, as long as it's not so extreme. And so extreme would be bulls over 60%. And right now they're at 57.3. So it might be getting to a trigger value, but you might have a little bit more upside before it tends to start being a bearish influence, is all I would say. Who is not bullish and who has been very bearish and got more bearish is the American Association of Individual Investors. And we were talking about this last week, right? Maybe it's generational. You got the Robinhood millennials are very bullish, and these are older men usually who are very bearish. They're at 48.9% bears. Compare that to their average of 30.5. And then only 24% of them are bullish. Compare that to the historical average of 38. So they have not been buying this rally at all. Of course, they've been wrong. So there you go. They're, you know, and then the last one is smart money, dumb money. It doesn't have enough of an edge one way or another right now to give a signal. It's less. It's just about a 22% spread. 46 smart, 69 dumb. That's not quite enough to act on it.
So which way would you lean then, given those kind of mixed signals there?
What it tells me is that you still probably have a little bit of upside momentum, but when we crack a major level, I think the downdraft could be fairly quick and severe. That's what it tells me. Because of that backtesting data, it's not a kiss of death immediately. But it does show weakness out about a month or so. All it tells me is that, yeah, if we do break some level, let's say we break the 50-day moving average, then maybe the downdraft might be pretty quick to the next level of support. That's what it tells me, for what it's worth. All right, let's take a look at the NASDAQ.
Nice test of the 20-day moving average today in the NASDAQ.
Yeah, I put that up for you. Yeah. We did have this little shooting star up there, and then we worried about the virus yesterday. We're not quite so worried today, basically, I guess. You also have horizontal support here at 98.38. And then let's take a look at the Qs. Pretty nice test of the 20-day, huh? Look at that. Yep. Right on it. But all I'm saying is with the sentiment data that, let's say that you break 234 or 237, you might have a really quick drop. That's all I'm saying. So we have a question: is there resistance at 247? Yeah, well, 247.5. Yeah, right up here. Because you got 1, 2, basically 3. That's pretty good resistance at 247.50. But I mean, just going back to technical analysis 101, low, 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 low. What are those? Higher lows, right?
Exactly.
So, the trend is still up. Uh, the Russell, not quite so good. Little outperformance today, probably because of
The banks.
the
It's the
banks.
banks.
Yep,
Yep.
banks. Yep. But we still have a potential head and shoulders. Uh, and we have horizontal. So I think the key levels to watch here, though, is you would confirm the head and shoulders. I would say if you basically broke right in here, 1337. Um, and that would be quite a break because you would take out that significant higher low and you'd take out the 50-day moving average and you would take out. So the corollary to that is that's a pretty good support level,
Right. Yeah, there's a lot
right?
of a lot of things that people are looking at there. So right, that would be a good level. Though we do note though that we got down from on the RSI down to right around that 50 zone once again. We're starting to turn back up again. So we've seen that on this whole kind of really up to the lows. It kind of tests that 50 level and then just quickly turns back up again. So we'll have to see if that continues once again. That's something else I'd like to look at.
Yeah, because that's typical bull market behavior
Right.
when downdrafts don't put it much below 50 and it turns back. Um, all right, let's take a look at sector action. I just want to make a couple of comments in general about that. Um, so we all know that technology has been outperforming every other sector, right, by
Right.
a lot. All right. Also, I mentioned this a day or two ago. You are approaching a 30-year extreme of the weight in the S&P 500 of tech versus industrials. Okay. Um, so tech is beating industrials this year by 29% relative performance. The only time it was greater than this was back in 2009. So does that mean anything? Yes, it means that looking at backtesting data, anytime tech has beat industrials by 15% halfway through the year, which is obviously what we have now, but even more severe, um, it tended to struggle relatively over the next 3 to 6 months. Now, that doesn't mean it can't go up. It just means that it might not have the outperformance versus industrials that we've seen so far. Um, Ditto for financials. Okay. Right now, tech is beating financials by more than 36%. That is the highest relative performance gap ever. Um, the next most extreme reading was through the 120 days in 2009, where tech beat financials by 29%. Other times you've had around, as I said, this is an extreme, but every time you've gotten close to this differential, there has been a strong tendency over the next 3 to 6 months for the relative performance to narrow. So it might be setting up uh, a little rotation, perhaps in a couple of months, back into those more beaten down sectors. At least history says that. Okay, that was all.
No,
So
that's
yeah,
really interesting, and because I mean we've not seen every time we've seen that rotation there, it hasn't lasted very long. So that would be a really kind
yeah,
of a shift there if we could actually get some a
yeah,
real change there.
yeah. Let's just see what's moving and not moving today. It's like some hmm, the oil services have been acting stronger, even with I've been watching bouncing off the 50 today. If you want to go long, you're getting a pretty good chance right there. You do have a little resistance at the 20-day moving average, but look at the support in here.
right? It's, I
So
mean, yeah, sets up an interesting, trade scenario, at least from a risk reward perspective, because you know where your stop would be just below there, and
yeah,
you'd have some potential decent upside.
yeah, you got up to the top of the range. If it takes that out, that previous swing high in there. Um, what else did we see? Whoops, what else did we see here? Let's put up biotechs in general. Well, you'd have to say that yesterday's action actually, it was a down day, but came off the lows and actually never got down to the breakout level. That's a pretty
Yeah.
strong test of that. So I think the path of least resistance here is still with the bulls. Let's take a look at the IBB, bigger biotech. Whoops. Um, better take remedial symbol.
Not
They seem
quite
to
as
be,
strong as, but still.
yeah, they're still bouncing off
Yep.
support. So, I mean, this is a typical throwback with a test. You know, have a place to set your stop, maybe under today's low, or if you want to get a little bit more room under the low a week ago there. But we didn't quite get to overbought though on the last run up, but still there was no divergence per se. Um, I think the XBI is a little bit stronger. If you wanted to pick one, let's see what else is moving here. Yeah, we got XBI. So
Banks, not
yeah, the
surprised there,
banks
right?
because of the FDC FDIC commentary. Let's take a look at them. Is that a successful test of the 50-day moving average?
Right now, if it stays
Looks
here,
like one.
it's like it. Yep.
Yeah, I mean, uh, you know, what we just said about maybe this might start catching up to technology a little bit, at least over the last few months. Maybe the stress test catalyst, if they come in okay after the close today, maybe that might give this a little bit of impetus to start moving again. Um, at least versus tech. We'll see. Let's take a look at the regionals. Same thing.
Very similar. Yep.
Yeah. We want to look at the home builders. Yeah. KB Homes had a not so good report today. So the bad news is it making kind of a in the sense of a kind of a head and shoulders.
Right.
The good news right now is it's testing. We'll see if it holds the bottom of that channel. But if it takes that out, that'd be the first time it traded under its channel now since March. So if you were in it, if that happened, maybe you'd lighten up a little bit because you could quickly go to the 50, which is kind of the top of the gap, and then you could get down to the lower gap. So you got to be careful right in here, I think. If you're a bull, though, you are getting an entry. You could put your stop either under the channel line or under the low from there. If it holds this, I would wait till it's closed again, maybe above the 200-day moving average, though. I don't know. What do you think?
Yeah, let it get the momentum in your favor because right now it's still. I mean, not like
Yeah,
what I said. Those bios stocks look a lot better. We're seeing that nice
yeah,
little here. Even the banks. Yeah, this one you're not quite seeing it yet. So
yeah,
probably better off waiting for something that looks a little clearer.
yeah. All right, let's see. Yeah, we've been watching the cloud computing stocks. Broke out, a little bit of a pullback.
Looks like the biotechs. Looks like this is
Yeah,
a similar chart.
yeah. So this is certainly a strong group. Again, the 20-day is something you might want to watch, but path of least resistance there is with the bulls.
So what's underperforming today?
Yeah, let's take a look.
Fertilizers. Yep. Well, grain prices are, yeah, definitely.
Yeah, let's take a look at that one. That had been in a pretty good uptrend, but it certainly looks like it's losing steam. But however, if you want, the only thing here, like you were saying, Mike, is this particular pullback did quite a bit of damage to the RSI, which the other
Correct.
pullbacks did not, right?
Right.
Um, so you might want to, I'd say, while you're right at the 50-day moving average, given the RSI dropping to the lowest it's been really since the beginning of the uptrend, sometimes when you break RSI support, if you've taken our RSI course, that can be a turning point. So while it looks like a good setup, I would want to see a bounce before I would take it.
Yeah, I agree. Because yeah, this one has the potential to fail a little more than we've
Yes,
seen some of those other ones.
exactly. Um, what else is not doing too well? Yeah, so this one had been doing okay, and then it's testing support too now. These are
And the same situation with the RSI too, also falling below 50.
yeah,
Similar.
yeah. I mean, I suppose also some of the weakness is kind of less enthusiasm because you got to wear a mask in a casino, I suppose. But yeah, again, I would, just to Mike's point on the RSI again, I would want to see a bounce, even though just looking at this, it looks okay. When you break long held support on the RSI, that sometimes means the pullback is a momentum killer. All right. Um, hmm, Gold miners aren't doing so well today. Let's take a look at them. Yeah, range bound really.
Yeah.
I guess you'd need, for these to get back in gear, you'd probably need to break out above 1800 on gold, wouldn't you think?
I would think so. Yeah, that would be, if we can get a solid breakout above 1800. Yeah, it's going to get a lot more interest in the miners as well too. So
Yeah.
if we can get to it, because it's a struggle. It's a struggle for those gold bulls.
Yep. It is. It's the easy money on the upside probably has been made.
Hmm.
Um, automobiles. Well, broke the 20, broke the 200. Do have support down here. Here, at least the RSI is holding in.
It's holding right.
But what's very interesting to me, I want to go to stock charts here for a second. Remember that Jeff Kleintop, our chief global strategist, as a way to kind of monitor what people are thinking about the virus, was the ratio between household products and automobiles. And you can see over the last, we've started to go back up again. I think that means people are getting just a little bit more worried about the recurrence of the virus. This was a very good sign when we broke down. Notice how we took off on the market. So this is just, a tad worrying, perhaps, just a tad. And with that, Mike, our time is up already.
Always goes fastly.
It does. So coming up next here, Schwab Equity Ratings Explain with quantitative analyst Adam Lynch. I'll be back tomorrow with Trader Talk. And Mike, you're back on Monday, I believe, at 12 p.m. Eastern for Spotlight on Futures with one of your favorite guests,
Dan
Dan
Gramza.
Gramza, right?
Yes, he's got a
Gramza
very
Capital.
interesting look at how he uses candlestick charts. It's not like your usual, classic candlestick chart usage. But yeah, Dan's always a favorite by our viewers.
Yep. All righty. Take care, everybody. Thanks again, Mike.
Thank you. Have a good weekend.
Yep.
So Schwab just taught me about an iron butterfly spread.
Nice. I just tried an iron condor.
Only spread I've been introduced to is this